What's happening? Monday is normally a quiet trading day, but trading in the past few sessions has been characterized by a decline in the liquidity. You find that supply in the large caps, blue chip companies is rapidly declining at these prices because investors are holding on to their positions hoping for better prices.
All right, now last week the market was dominated by news of the KCB rights issue. Is that still weighing heavily on the market and market sentiment?
Well, definitely the KCB rights offer, it's a big offer. It's going to affect the market, the liquidity levels, market interest. And you realize with the amount of money on offer, the previous 2 weeks of trading, KCB was heavily demanded. Then after the announcement of the rights price, the price started coming down. Well, definitely it's going to remain a close watch in the coming week up to when we see the rights coming to the market for trading in the open market.
All right, what's the position of other banking stocks?
Well, banking stocks have been in good demand. Demand is healthy on the banking stocks. The financials, the demand level is still high, although supply is not coming through at these levels. Perhaps I could mention Equity Bank, Cooperative Bank, which are highly demanded right now, but there's not so much liquidity. I would also maybe add to that list Barclays Bank, but the same trend is also being witnessed. So hopefully as prices go higher, some liquidity is going to free up.
All right, let's talk about what's been happening within the ICT sector, and we know that companies like Safaricom are dominant stocks on the NSE 20. Now, we've seen the regulator coming through with a variety of reforms proposal. First and foremost, they were investigating monopoly privileges by companies like Safaricom on the basis of complaints by smaller operators. Then in the last week, they introduced a reduced licensing fee of $10 million versus $25 million to make it easier for rival companies to move into the 3G space. Has that impacted in any way on ICT stock?
Well, definitely the move by the regulator to escalate the regulation regime in Kenya has taken an interesting turn in the recent weeks. Well, to begin with, the reduction of the 3G license fee. The other competitors of Safaricom have been lobbying for this reduction to be effected, and now that it's been dropped to $10 million, it's expected that the rest of the telecoms operators are going to catch up. But this again will require a lot of OPEX time and also significant CAPEX expenditure. Now, to deal with the other issues of regulation, the regulator has also been keen to maintain a level playing field. And this has been seen to be targeting the dominant player in the market. But in the short term, we see no significant impact on the leading telecom service provider, which is Safaricom.
All right, still staying with issues around regulatory interventions within Kenya. There's also been reported today that the regulator is looking at reviewing the processes at which operators sell shares, and possibly going forward, operators that want to dispense of their shares will have to seek regulatory approval, especially if we're talking about ownership above 15%. And a lot of this is believed to be inspired by Barty's takeover of Zain's assets in Africa, given that this is probably the 5th time that Zain changes shareholding. Some people would say that's good for consolidation in ICT, but clearly the regulator doesn't agree.
Well, definitely that's an interesting turn, because you realized in the Barty buyout of Zain Kenya, there were capital gains, and it might be argued that the government should be able to obtain some and benefit from the capital gains tax. But if you scrutinize most of the deals, telecoms players in Kenya are fairly static. The anchor shareholders remain largely the same, except in the case of Zain Kenya, which has undergone series of buyouts. But if the regulator goes ahead and implements this proposal, it definitely should have provisions of dealing with listed companies such as Safaricom, because how then are you able to regulate the shareholding unless you're regulating the anchor shareholders of these companies?
All right, and just finally an input from you, Gregory. Other counters that we haven't spoken about that we should be looking out for, other stocks that did well today?
Well, definitely in today's trading, the demand levels were high on continued high demand levels on large caps. We'll also mention the cement companies. also witnessing improved levels of demand. The banks, as we have mentioned, and once the prices are coming down, investors are quick to take opportunity of the short-term market weaknesses and accumulate on these stocks. Well, you'll basically be able to also look at counters such as Kenya Airways, where investors are also expected to accumulate on the price dips. So all in all, I think the market is showing the healthy demand levels, although more liquidity needs to come to support market activity. Also, Safaricom has also remained quite stable, and KCB remains a close watch in the coming sessions.